I want to congratulate you on taking action on the multifamily real estate asset class. It's a tremendous asset class and it has totally transformed my life. So before we get into the content of multifamily real estate, I want to talk with you about the people that get the best results in multifamily real estate. And those people share one thing in common, and that is their commitment to multifamily real estate. So let's walk through the definition, or my definition of commitment. So my definition of commitment starts with focus. Like, what are you focusing on? There's so much stimulus going on out there. Like, what are you focusing on? Are you focused on multifamily real estate? And if you focused on multifamily real estate, you'll start to see the results in multifamily real estate. And that's why I'm happy for you, because you are here. You're focused on it, right? So step number 2 for me in commitment is overcoming the challenges. Now, this is a long-term game. Like, this is get extremely wealthy over time game. So over time, just like anything in life, you're going to have challenges. You're going to have problems. You're going to have issues. And you just got to continue to work through them. You got to overcome them, right? You got to continue to push through those problems. So people who are committed overcome things, overcome the challenges. And the third component for me for commitment is consistency. Are you going to show up day after day after day? Are you going to show up and do what you need to do month after month after month? Are you going to show up and do what you need to do year after year after year? And now what I always say is that in multifamily real estate, the first year you're just getting a taste of it. And you're like, wow, this is really powerful. This is really starting to change my life. But then 5 years from now, you're going to look back and never even recognize your old life. That's this game of multifamily real estate. That's how powerful this game is. So that's the commitment with multifamily real estate. It starts off with focus. It starts off with being a person who can overcome challenges. And then number 3 is someone who is consistently going after what they want. So what is multifamily real estate? So multifamily real estate, there's 2 types. There's residential multifamily real estate. There's residential. And that's 2 to 4 unit properties. Those are your duplex properties. Those are your quads, your triplexes, right? 2, 3, 4 unit properties. That's all residential multifamily real estate. Then there's also commercial multifamily real estate. Commercial. This is your 5+ units. This is going to be where the focus is on this course, right? The focus is going to be on commercial multifamily real estate. 5+ units. So that's your 5 unit, that's your 50 unit, that's your 100 unit, that's your 300 unit property, that's your 1,000 unit property. Those are all commercial multifamily unit properties. And why do I love commercial multifamily unit properties? Well, we have to go back to my story of why I love multifamily unit properties. So when I first got into real estate, I was reading the Rich Dad Poor Dad book, and I realized that I didn't want to be the employee. I wanted to be an owner, right? I wanted to be the investor. And the only way that I knew how to at that point in time, in that moment, was to buy a piece of real estate. So I ended up buying a condo, a 2-bedroom, 2.5-bathroom condo in Atlanta. And I thought I was this big real estate investor buying that condo. And it was a great condo. I really enjoyed living there, but it wasn't an investment looking back. So my second property that I bought was a single family home. Single family home was great as well. You know, I actually learned a lot about development from that single family home because I worked specifically with the tradesmen to actually renovate and make the home livable to actually rent out. But I shared with my story about my tenant moving out of the property in the middle of winter, and once they moved out, I wasn't able to find a new tenant, so I had to pay the bills for that property for 3-4 months during winter. And the problem with that is that, you know, when you have a single family home, you lose one tenant, you're 100% vacant. If you buy a commercial multifamily unit, right, that's 100 units, you lose 10 people, you lose 10 residents, right? You're still 90% occupied. So there's a massive difference between it. So I bought the condo, I did the single family home, and then I realized that, I can't do single families anymore. I need to focus on like having at least 2 or 3 people in my unit. So that's when I bought my first row home in DC, and I converted it into a duplex property. So when I bought the property, it was currently just a single family home. So what I did is I took basement and first floor, made that 1 unit, and then second floor, I added an addition to the top and made that unit number 2. But during the process of transitioning that from a single family row home to a 2-unit property, I wasn't receiving any cash flow. I had to pay all the bills again. And in the process of doing that, I created a lot of value in the construction process, but I also was taking on a tremendous amount of risk because I was the one that had to pay all the bills. Whereas multifamily properties are generating cash flow from day one. They're generating cash flow to help you pay the mortgage, to help you pay for construction. And as that process helps you pay for the items on the property, it continues to move the property forward without everything having to come out of your pocket. So I did the duplexes, and I was in the process of looking to buy a larger development site where I could put 10, 12, 15 units, because I knew I had to scale. I was doing really well with the duplexes and the triplexes and the quads, but I knew there was more room to grow. I knew there was other opportunities out there. So what I did was, before I bought that development site, I heard this podcast, and it was on that podcast was a multifamily real estate owner. And while I was listening to him speak, I heard him share a story about him receiving cash flow from day one. And I compared that to my story where I was buying those duplexes and there wasn't any cash flow. So I'm like, oh, wow, like this property is big enough where you can still do construction, you can still add value, but it's generating cash flow. So that checked box off number 1 in my head, like, wow, this is interesting. I then heard him talk about having third-party property management. And I was totally blown away by this because it was so foreign to me. Every property that I ever had, I was the one that found the tenant. I was the one handling the calls from the tenant. I was the one, collecting the rent from the tenant. I never had a property manager. Why did I not have a property manager? Because I could never afford one. The margins weren't large enough for me to afford one and still get the results that I wanted. So I always took over the property management and duties. So when this person on the podcast shared that they were able to hire third-party property management, I'm like, wow, imagine what I could do if I got all my time back from not having to deal with these tenants. So that checked off box number 2 in my head. And then in the podcast, they talked about how multifamily real estate was valued. And this was the biggest thing for me. Like, it totally blew me away. So the quads and the duplexes and the triplexes, the residential multifamily, is valued based off of the comparable market theory. So that's how like your single family homes are valued too. Like, so if you own a single family home and your neighbor goes to work and he realizes that he gets laid off from work and then can't find another job, and then his home ends up going into foreclosure, and then the bank sells it for a discount. Now, the value of his home was sold for less than the value of your home. That's going to have an impact on your home because it's a comparable home sale in your neighborhood. It's going to affect you. The value of your home is going to go down. Whereas multifamily real estate the value is created based off of the income that it generates. So multifamily real estate is valued off of the NOI, the net operating income. So if I can increase my income and keep my expenses the same, my net operating income is going to increase. Therefore, my value is going to increase. Like, I can raise my rents to increase my net operating income. I can charge for parking to increase my net operating income. And as you increase those those line items, the value that you create is life-changing, not only for you, but your investors. It's a tremendous amount of value. So that was checkbox number 3 in my head from hearing on that podcast. So I heard 3 things that were really powerful. I heard number 1 was cash flow from day one. Heard number 2, which was I could hire third-party property management. And then I heard checkbox number 3, which is that the way multifamily real estate was valued. Totally different from what I was previously doing. So I then took the next step and I made a passive investment in a multifamily deal. And while I was making that passive investment, the first year went by and I received all of this cash flow. And then at the end of the year, I got my K-1 tax return for my ownership portion into that property. And even though I had received cash flow all year long, I'd received a portion of the rent payments that the property had received all year long, my K-1, my tax return that I received from the property showed negative. Therefore, I didn't have to pay any taxes on the cash flow that I received. So that totally blew my mind when that happened. And then I took the next step, and then that's when I became an operator in a multifamily deal. I was part owner and part operator in a 284-unit property in Austin, Texas. And when we acquired that property, it was an opportunity that was large enough for me to bring in other investors. And I had gotten a call from my wife's roommate's in college husband, Brian. And Brian's on the call now. This is Brian Kinney. And I got a call from him, and he was looking to buy a single-family property at the time. And he was asking me all these questions, and of course I gave him all the answers to the questions he was asking. But in the back of my mind, I was like hoping that he wasn't going to buy that property, because I already knew Brian was a person that was already working 18 hours a day. I already knew he was committed already, and that the single family property was just going to be another headache for him. So he ended up passing on the single family property. And then I ended up showing him this multifamily property, the multifamily property in Austin. And Brian looked at it and he's like, wow, this is really powerful. I'd definitely like to take another deeper look at this thing in this asset class, because prior to that, Brian had only really invested in stocks. So Brian took a look at the investment opportunity, and he got back to me, that weekend. And his email was like 2 pages long. I was like scrolling. And then I was looking at his analysis of the property, and he had dug back to the early 2008 timeframe when and saw how the Austin area handled that downturn. And he then compared that time to the property and said, like, worst case scenario, the property would break even if it was receiving 70% rents, and he just did all this analysis, and I was like, wow, this guy's a natural. This guy really is into it. So he then committed to that multifamily deal and became a passive investor in that deal. And so that was my first deal that I operated in. That was an operator in. And then since then, we've bought in another 282 in San Antonio, Texas, 205 units in San Antonio, Texas, and 152 units in Atlanta, Georgia. And all of those deals have been operating amazingly during the coronavirus. It's been powerful for me to see how they've operated. I mean, we're at 95, 96, 97, 98, 99% occupancy all through the coronavirus, where we're seeing retail and hotels and office buildings getting crushed. We saw the stock market get crushed. And multifamily real estate stayed basically fully occupied during this entire time. So it's been a great journey into multifamily real estate. I'm going to introduce you to Brian. I'm going to let him share his story in the multifamily real estate. My business partner. he's definitely helped me with my analysis on multifamily deals as I've gotten bigger and wanting to go after more deals. And yeah, Brian, I'm gonna bring you on.
Yeah, hey guys, and thanks Oliver. Yeah, super excited for you guys to get started with this course. And like Oliver said, I'll be helping out along the way. Just to give you guys a little bit of info about me, my background is in corporate finance. I've worked for a variety of companies, typically in a financial planning and analysis type role. I like to build Excel sheets. I'm big into the numbers. I really love kind of digging into an investment to vet it out and kind of see what kind of projections we can put together for the future. And that's one of my main passions. So anything with Excel sheets, numbers, data analysis, I'm your guy, right? So I've been investing. I first got interested in investing back in the '08 crash, right? And back then, you could really take a look around. And you saw just a ton of assets, really great cash flowing assets that were selling at steep discounts in valuation. So that kind of got me into the game. And really, I've kind of carried that as a cornerstone of what I consider to be good investing since then. And kind of how Oliver mentioned, my journey into real estate, I started thinking, okay, things are going great with the stocks, but there's a whole world of asset classes out there that I want to explore, right? And real estate is one of them. I started listening to podcasts. I started getting into it, and so I figured the logical step, I don't know what I'm doing with real estate. I want to go buy one house. So that's what I started looking at, right? I started looking in my backyard. I started looking for some single families that were available, and I found one, and it's like, okay, this one looks okay, running some analysis, cash flow looks, okay. At the end of the day, though, it was a little tight, and it was going to be a lot of effort and a renovation for, a not so much of a return. So I called my buddy Oliver and was like, hey, let me run you past some of these numbers. I think it's an okay investment, but I know you know a lot more about the real estate than I do. So we started talking, and he really kind of opened my eyes to the world of multifamily, and you don't need to start at the bottom to get into these high quality assets. So I never really looked back after that. Like Oliver said, we went into this Austin property, and it's been performing great. And that was the beginning of everything. So I'll kick it back over to Oliver to kind of close you guys out, but that's my background.
Great. Yeah. So again, I want to congratulate you for taking action, for moving yourself forward in multifamily real estate. It's a tremendous asset class. It's a game that get extremely wealthy over time. It's not a get rich quick game. It's a get extremely wealthy over time. It's a leave a legacy for your children's children game. And I'm happy for you. I'm happy for you for taking action on yourself, for your family, and congratulations.